Mark, thank you so much. State Farm was granted a significant rate increase at an emergency hearing back in the spring, but the insurer still wants to raise premiums.
On your sides, Christine Lazar joins us now to go over what California's largest home insurer wants and how likely they are to get it. This doesn't sound great, Christine.
Yeah, Jamie and Rachel, back in May, the state's insurance commissioner approved a judge's decision to grant State Farm a 17% increase in homeowners insurance, 15% for renters and condo owners. But that wasn't the full amount they were requesting. And I'm joined now by insurance expert Karl Susman to break this all down. So, Karl, explain it to us. They still want more.
Well, it's almost not as if they want more. They want what they've initially asked for. They seem to be getting it in little dribs and drabs. So they did ask for a rate in middle of 2024, the end of 2024, and then after the fires. All of that put together finally went to a hearing. A judge said, okay, we'll give you some of this right now until we have a full hearing where you have to justify the rate. So that's where we are at this point. They have the rate that they've been granted on an emergency basis, and come October, I think it's the second or third week of October, they're going to have to justify that rate and any more they're looking to get.
Okay, so let's look at the numbers. By the numbers, they're asking for an additional 8.2% increase for homeowners, 25.8% for condo owners and renters, and a whopping 79.3% for rental units. So, you know, if you have another property that you're renting out. Do you see these rate hikes being approved by the Department of Insurance?
I think it's going to depend on what the numbers look like. What's interesting about State Farm is that, you know, they've always been drastically below market. You know, if you have a range of every insurance company and they're somewhere in here, and then all of a sudden State Farm's rates way down there, at some point that's going to catch up. And I think what's happened after this large fire and all of these losses that are happening is it's finally caught up. So they are trying to play catch up to where the actual risk and premium should be.
I think what's frustrating for people, though, if you talk to fire survivors, those who have State Farm, a lot of them are very unhappy with how this has gone after losing their homes or having their homes damaged. You know, not getting payouts that they expected, you know, dragging their feet, insurance adjusters, I've heard it all. Can the insurance commissioner take that into account? It's one thing to say, hey, we need this money to be financially solvent, but do your job for those who are suffering now from these fires. Does that get taken into account?
Well, the Department of Insurance is well aware of State Farm's shortcomings with claims, and they've opened up a formal case with State Farm. They're basically getting a tax audit. They're having every claim looked at. They're looking at the adjuster notes, at the claimant's requests, and what's coming, the timelines, everything. As far as taking that into consideration, they're really separate issues because insurance companies have to pay based on the contract. That's what the policy is, right? It's a contract, regardless of anything else. And at the same time, if they need money to pay claims, they need to have the rate for that. So they're really separate issues. But as it turns out right now, State Farm is really getting hit on both ends because they need rate, they're asking for it, and at the same time, they're getting hammered for poor claim handling.
So let's say they do get this increase. Do you think that we're going to see this with other insurers as we head into the fall and kind of move further away from the initial fires?
I think what we're going to see is carriers starting to balance out. We're not seeing a lot of other filings. I go through, I'm nerdy that way. I'll look at the actual filings by every insurance company, and I'm not seeing them like we did initially, where every week, every other week, you're going to see a carrier asking for more rate. I think we're starting to get to an equilibrium. But State Farm, again, because they started out at such a deficit, so far below what the market price really was, especially, as you said, for landlords, for rental policies, 78%? That's mind-boggling, right? But that's why everyone was buying the policy there, and they were telling other companies, oh, you're so expensive. Now they're having to play catch up with that.
All right, last question for you before you go. There are two Fair Plan related bills that kind of just made their way through Sacramento. Can you briefly tell us what that will do to the Fair Plan?
Right. Well, AB 226 is the one I think we're talking about, and it's going to allow the Fair Plan to have access to capital quickly. It's going to let them take out loans, credit lines, bonds, have access to cash. The important thing is we always want to be sure Fair Plan has money, but the good news is that in the event that these loans that are taken out are defaulted on, consumers don't have to worry about it because the insurance industry that pays and keeps the money in Fair Plan, they're the ones on the hook for paying those loans back.
Yeah, I think everybody's just frustrated because they feel like when they need their insurer, they're not there the way they want them to be, and then they hear them ask for more money. So hopefully that'll get sorted out in those hearings and kind of, you know, put their feet to the fire a little bit and paying those fire victims back.
I think so.
All right. Thanks, Karl. We always appreciate your insight. So for more information on the state's insurance crisis, go to our insurance landing page on kcalnews.com/insurancehq.